Light is Britain's far-right conspiracy theory paper spreading hate and vicious lies. No, that's what the BBC say. The Light is the only national newspaper bringing you the real news and informed opinion on what's really going on today. You can subscribe, order copies, submit articles, and read back issues on our website, thelightpaper.co.uk, and see for yourself why the establishment are so worried about the uncensored truth getting out to people every month. The Light Paper. Not far right, just right so far. Thelightpaper.co.uk.
Scene script. Have you ever pondered the idea of financial independence and early retirement? The notion of not having to clock in at 9 or wrestle with the daily grind? Imagine a life where you're not shackled by financial obligations or a demanding job. It's not an impossible dream, but a reality for those who embrace the FIRE movement. That's financial independence, retire early. Consider the tale of Jane, a woman in her early 30s. Jane was an ordinary person living an ordinary life. She had a 9-to-5 job, a mortgage, car payments, and a lifestyle that was comfortable but hardly extravagant. And like most people, she dreamed of a life where she didn't have to worry about money. Jane decided to make a change. She began by cutting back on non-essential expenses, saving as much of her income as possible. She invested wisely, focusing on assets that generated passive income that didn't require her to trade time for money. Slowly but surely, Jane began to build her financial independence. She was still working, but she was no longer living paycheck to paycheck. She had a safety net, a cushion that gave her the freedom to make choices based on what she wanted, not what she needed. Fast forward 10 years, Jane, now in her early 40s, had achieved her goal. She was financially independent. She had enough passive income to cover her living expenses, and she no longer needed to work to survive. She was free to retire early, to spend her time as she pleased. Jane's story may seem extraordinary, but it's not unique. It's the story of anyone who has embraced the principles of the FIRE movement. It's a tale of discipline, of sacrifice, and of a relentless pursuit of financial independence. To summarize, the key points discussed today revolve around the idea of financial independence and early retirement. It requires discipline and sacrifice, cutting back on non-essential expenses and saving as much as possible. It involves investing wisely, focusing on assets that generate passive income. But most importantly, it requires a change in mindset. It's about seeing money not as a means to buy things, but as a tool to buy freedom. It's about understanding the true value of time and the freedom that comes with not having to trade it for money. This is the essence of the FIRE movement. It's not just about retiring early, it's about achieving financial independence, about gaining the freedom to live life on your own terms. Like Jane, you too can embrace the principles of the FIRE movement and embark on a journey towards financial independence and early retirement. After all, the only thing standing between you and your financial freedom is you.
Ever wondered how much you'd need to save to achieve financial independence? The answer lies within the mathematics of a concept known as FIRE, which stands for Financial Independence, Retire Early. The most essential number in your journey to financial independence is calculated by multiplying your annual spend by 25. Notice the emphasis on annual spend, not annual income. This calculation is based on the principle that you need £300 invested for every pound you wish to spend each month in passive income. Hence, your FIRE number is also your monthly spend times 300. This mathematical principle is founded on the 4% safe withdrawal rate, as defined by financial advisor William Bengen. He proposed this rate after analyzing the S&P 500, which typically produces an average of better than 10% growth per year when studied over a period of approximately 30 years. Bengen considered factors such as inflation and market volatility. After studying previous market activity, he concluded that a 4% rate of withdrawal per year would provide for a 30-year sustainable portfolio in the vast majority of cases. So to paint a clearer picture, if your monthly spend is £1,000, then your target for financial independence is 300 times 1,000, or £300,000. Alternatively, if your annual spend is £12,000, your financial independence target is 25 times 12,000, which also equates to £300,000. The first step in planning your financial independence, therefore, lies in understanding your monthly and yearly expenditure. Without this knowledge, it is impossible to take further strides towards your financial freedom. In summary, the mathematics of FIRE revolves around the principle of multiplying your annual spend by 25 or your monthly spend by 300 based on the 4% safe withdrawal rate. Knowing your monthly and annual spend is crucial in determining the amount you need to save to achieve financial independence. Armed with this knowledge, you can then plan your journey towards financial freedom. Remember, the journey to financial independence is not a sprint, but a marathon. Embrace the mathematics of FIRE and take the first step towards your financial independence today.
Good morning, guys. It is 9:50 on Monday, the 14th of October 2024. That means that we have completed 2 years and 28 weeks, so just over 2.5 years in this 8-year FIRE journey, FIRE experiment, if you like. And the big news this morning, if you like, is that the S&P 500 on Trading 212 at least is showing its highest price to date. So currently sitting at 84.49, up 0.25% today. So not a shocking rise today, but that is just building on what had happened last week. If we scroll down and look at the stats here, you can see, as I just said, that this is the highest point that the market has reached to date, and certainly that's reflected in the 52-week range there. So currently just below 84.50, and I wouldn't be surprised if there's not a little correction that creeps in at some point during this week. I think it's probably fair to say that quite often the market appears to be a little bit jittery whenever new highs are reached, new barriers broken, etc. But I mean, that said, if you take this point here, and look at what has happened. I mean, the market pretty much continually went up, right up to about there. There was a little pullback, but not much. A little bit of sort of just checking, and then it sort of continued up a bit. There was a bit of testing there, and then it has continued on up to the current point where it's currently higher than we've seen it before. And so let's just take a quick look and see where we're at with our virtual portfolio. As I say, current price, I think it's just moved there, 84.49. In the portfolio at present, we've got 233 shares, and that's worth 19,700. The return on investment is just under 24.5%. Average purchase price as things stand, 67.88. and that will move upwards whenever we put in this week's investment. Before we do that, let's have a little look at the notifications. So just two to bring you this time. MicroStrategy surges 12% after Michael Saylor outlines vision for a $1 trillion valuation as the first Bitcoin bank. So I know nothing about all that. Moving on, Tesla down 10% as traders digest underwhelming Cybercab robotaxi reveal. And just in relation to this first one here that talks about a Bitcoin bank, anything that has anything to do with cryptocurrency makes me nervous. And it's not that I'm nervous for my portfolio, because I don't have any cryptocurrency. If I were starting my investing journey in my 20s, or maybe even my 30s, I might suggest, and it's a might, it's not a certainty, I might suggest that you might choose to put maybe 5% of your portfolio into some kind of cryptocurrency. I suppose, I mean, if we were to take the same strategy as what we do for exchange traded funds, maybe the smart money would be on, is there an equivalent to an ETF where basically you can just buy the market? Is there something like that? And if there was, then I might invest up to 5% of the value of my portfolio in that. Given that I'm in my later 40s now, and I don't have time to mess about to take that kind of a risk, and as I say, it would be a maximum of 5%. That is as much as I would even put into it in my 20s or 30s. Simply because that's what the big billionaires have done. They have restricted their portfolio, their crypto portfolio, to a very, very small percentage, and the reason really behind that is that it is so volatile, and not only that, but that, I mean, the UK government actually suggested that cryptocurrency should be regarded as gambling as opposed to investment, and I tend to agree with that. I know a couple of people that have dabbled in it. One of them I know for sure definitely lost money. Now I wouldn't quite honestly credit that person with the highest level of intelligence, or indeed I wouldn't particularly credit that person either as an investor. Is not somebody that I would rate, if you like, in those terms. But I know for sure that this particular individual had put money into cryptocurrency as well as other things, to be fair. But then turned out that was money that was wanted for a big purchase, and ended up cashing in, but not at an optimum time, and it cost him. So 2 seconds, guys. Right, that's better. Right, we've had a look at the notifications. Let's go ahead and invest our weekly £120 into the market. So obviously these are theoretical pounds. Actually, just a quick note there. I see that the rise today has reduced slightly. We're down to just less than 1/5% now. where before we were up roughly 1/4%. So we are investing 120 theoretical pounds into the market. That's going to buy us about 1.42 shares at current market value. I will be submitting this as a market buy, given that the market is open, and normally there's enough movement to see a fairly instant execution. Even in the real market, it does tend to happen just about as quickly as this. So let's send that through and see how it goes. 67.88 was the average purchase price. Let's see what it goes to. Okay, so it's gone to 67.98 there for the average purchase price. It's kind of in grey there, but I can read it. So we did get 1.42 shares, purchase price 84.43. The figures have updated, and now our portfolio value is 19,832. It looks as if the growth for today is kind of slowing, only up 0.16% as things stand. That could well go negative by the end of today. That would not be a surprise. Everything is subject to change whenever the American markets actually open at about 2:30 in the afternoon. So really up until that happens, we'll not really know for sure. Right, I'm trying to remember if there's anything else to cover. The free shares offer is still open. It's open for roughly another 3 weeks. And you can access that through the affiliate link in the description for this video. As I would always say, please only use the free shares link if you are convinced that investing is for you. If you've done your research and you're happy to make use of the Trading 212 platform, and frankly, only really if you would have been opening a Trading 212 account anyway, and you were just lucky enough to see the free shares offer at this time and take advantage of it. But other than that, if you're not sure what you're doing, please don't use it. Please don't go there. You're more likely to lose money than make money, I think. If you do not know what you're doing, and it's better not to try it. For anybody that does make use of it, you will receive free shares, and I think the terminology is up to the value of £100. So it's not saying that you will receive £100 worth of free shares, but up to £100 worth of them. And likewise, if you use my affiliate link, I will also benefit, which would be very nice indeed. So with that said, guys, I think that is it for today. We've had a look at the notifications. We've had a look, see where the market is at. Currently at its highest point. As I say, it's highly likely that will fluctuate or at least correct a little bit over the next few days. I suppose if you were a day trader, you might decide that was a good point to start putting in inverse investments, and maybe inverse with leverage, in the hope that the market would drop quite a bit and then you could sell and make a bit of money. But I'm not going to do that. That's a sort of a pessimistic way of doing things. Yeah, it's not really how you should invest. So guys, with that said, thank you for watching. I will be back again at some point next week with some more, and in the meantime, why not have a look at the other videos on the channel. If you go to the channel homepage, look for the financial education playlist, and there's some really good stuff there. But in the meantime, have a good end to your Monday, and thanks for watching. Goodbye.